A global crisis is on now. That's what we will discuss here in this video. Many years ago, I was on a mission to inform everybody around me, friends, family, co-workers, about what was going on and the debt-based monetary system and how we have to change the way we look at our investments and, of course, our job, the way we earn money, everything. And guess what? Nobody wanted to listen. So I ventured out into the world of YouTube to try to bring this information out to like-minded individuals. It has taken a long time. It's been a hard road, but I have been able to inform people at a level of depth that, quite frankly, is not understood by most. So I want to thank you for being here, and the information we'll share today is just a snippet of what's available, and I want to give you as much as I can. Let's begin. First things first, Euro area GDP quarter over quarter. Officially right now, Europe is in a recession. They're not the only area, of course, and it depends on where you look specifically, but according to Christine Lagarde, only back in February, Lagarde says no Eurozone country will be in recession in 2023, and yet here we are, Europe in a recession. It's pretty funny to see something like that. Of course, they can't say that because it would make things worse. They have to lie to everybody all the time. Eurozone saw winter recession, more challenges ahead. Eurozone slides into recession as inflation hurts consumption. We have weaknesses in Germany and Ireland, more than offsetting the growth in other economies at the start of the year. Depends on where you look, stronger areas, weaker areas. But ultimately what is happening here, borrowing costs, inflation is up, energy prices went through the roof, food prices still very, very high. You've got issues in the UK that can't be dealt with. It's been so many years. They're blaming Brexit still. There's problems, okay? You have a lot of geopolitical problems as well within that. And then on top of this, you have the war with Russia, just slowing everything down, making it more difficult. The businesses are concerned. I don't want to do business with you. I can't do business with you. So things are really getting sidelined right now, and it's just stretching out. It's going for a long time here, a year into the war, and doesn't look like it's going to be ending anytime soon. So now what we have are the problems of Europe on a very, very slow economy overall to begin with. And then we add inflation to that. And of course, this is like stagflation, but even worse in a sense. So that is going to be met with printing press. And they are going to do this, and they're trying to fuel the inflationary fire. And I do believe it is extremely dangerous. That's why you as an individual, you have to take action on your own. We'll talk more about that in a few minutes, okay? But I want you to know specifically that the problems of Europe are being faced elsewhere too. Australia's recession risk spikes as RBA, that's the equivalent of the Fed, peak rate seen at 4.35. Economists see a chance of a downturn at 50%. Up from 35% in May. Narrowing of the yield curve suggests the recession is all but inevitable. This is the same thing like the yield curve inversion that is often talked about with the United States. Same thing everywhere around the world. You can compare New Zealand, Australia, and the US, all heading in the same direction. Australia is a little bit behind the others, but you can definitely see that they're trending in the same direction. Yield curve inversion is generally a perfect indicator. You hear me? It is a perfect indicator. When it inverts and then comes back up, when it does that on the way back up, that is like signal, like red alert, everybody watch out. Just to get into it a little bit more, I have seen this over and over again. I've looked through the history, just everything. I've looked through as many possible cycles as I can and will continue to do so. And when I see this, it is a flashing red alarm. The question here is what happens. Now, depending on the country, depending on the time, we go way back thousands of years, how do they deal with it? Usually the currency is debased, it's devalued. How can they do that? Well, they can do it many different ways. They can give money directly to the people. They can devalue the currency by printing it and throwing the money around the banking system in this ridiculous way of quantitative easing and other things. They can do public works projects. They can just say, okay, we need bridges to nowhere. We need homes to build in this place that nobody wants to live in them. They can do all kinds of different things. but ultimately they're trying to stimulate where there really isn't, the desire to do so. Okay, they just pump, 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 and that usually creates a bigger problem down the road. But they will do that. That's ultimately what they will do now, and that's what they've done in the past. And so we can expect that again. And so that's really where we have to be aware of this. I've studied the history, and it is certain. A lot of the individuals out there, the prominent ones, the ones that are getting a lot of views, they're talking about something that is generally related to deflation, okay? And people want to experience a deflation because why? Okay, they're pandering to an audience of people that maybe they really are hurting at this time. And they want to know that prices will come down significantly, so that gives them an opportunity to buy in. Now that would be great. That would be fantastic. And maybe there might be an opportunity for that, but that might be very brief. And the reason is that the central banks will want to fuel the inflationary fire. How do I know this? Well, I've studied it over and over again, but back in 2002, Ben Bernanke, who was the previous Fed chair, he said something very clear. He said that they are willing to devalue the currency as they have done before. And he cited 1933 by 40% if necessary. This is what they said. This is a documented fact on the Federal Reserve's website. Ben Bernanke saying that we have to make sure deflation doesn't happen. Time and time and time again. Now, it depends on the asset class. It depends on what happens and how it unfolds. Is it in several stages that occurs over a 5-year period? Or is it something that happens overnight? All of these things determine the actions that the government and the central bank will take. But you got to understand this. And that's why I'm slowing down here for a moment, just to highlight that. You got to remember the bias and the reason that a certain person is going to share information with you. I can go talk about that more, but anyway. China's deflation risk fuels calls for interest rate cuts. And so you can see what's happening here. They've reduced their reserve requirements. So banks need to keep less on hand. That means they can loan more out, right? They're trying to create inflation right now. That's what China's doing. They're doing all kinds of things. I've covered them in previous videos here. Have you seen that? If not, you definitely want to hit subscribe, because then I'm going to bring that to you each and every day. By the way, that subscribe button right next to the like button, okay? You can hit that like button right there as we talk about Peru. Peru holds interest rates at 22-year high as inflation cools. So you could see what's going on in this particular country, that they have to bring interest rates way up, and they're trying to get inflation down to 3% by the end of the year. Now, this is just one country, but they're all basically doing the same thing. They've got to try and increase interest rates, but not completely shatter their economies. Interest rate, depends on the country, obviously, but generally, we are watching interest rates being, very high. Not necessarily at the highest they've ever been, but depending on where you look, it's very high. That restricts the growth of these economies, okay? And it puts pressure on them. Why? Because they have so much debt. They all have so much debt. So you see how these things connect? Deeply inverted curve highlights restrictive rates. And so we can see that in the United States, but look at it elsewhere. Yield curve inversion, no matter if we're looking at Australia or the United States, same situation. As it reverts back in the opposite direction, we encounter a recession in a very short period of time. It's a simple matter of fact. Now, looking at the next aspect, that's the economy. A couple quick points I want to make. China's share of U.S. good imports falls to the lowest since 2006. Overall imports to the U.S. rose in April. Exports declined. A lot is happening right now between China and the U.S., and I could speak at length about this. We had the whole tariff war. We had the tit for tat back and forth. We got the Taiwan situation. At the same time, China is making deals with other countries. They're saying, oh, hi, Brazil. We'd like to buy more stuff from you. And they're going to Saudi Arabia and saying, hey, I want to do deals with you, but maybe we should do it in our currency instead of the US dollar. Oh, that sounds good. All these things are happening all at the same time, okay? What I would say is, in part, a lot of the retailers in the United States are not in need of so much stuff. Okay, China wants to sell stuff to the US. Let's be very clear about it. They want to export, they also want to export to Europe. But what we have seen is that there's been a decline in demand. 2020, people were, all these stores and everything, they were ordering like crazy. We know that, we know all the details there, that's already been said 1,000 times. But this time they're saying, well, people are not necessarily buying as much of what they did before, and we don't need people, they're not doing what they did. They didn't have the same habits of 2020. So we can scale that back. And that's still going on. That's actually still going on today. There is some talk of, the iPhone, people not buying as many iPhones as they did before. But I think based on the fact that during this time, a lot of people don't buy as many iPhones because they're simply waiting for September when they inevitably release their next iPhones. Okay, so, let's balance that out a bit. Okay. Worsening trade could adversely affect US GDP as deficit jumps to the highest level in 6 months. So this is just more of that, and we could see what's happening with the economy globally. Trade is one of those that we always must watch. And so it's trend. It's clearly a trend here, and I just think that the economy is in a slower moment than we were, let's say, a year ago or even 2 years ago. And we're getting that to show up in the data right now. Then we have this, just saying that inflation's making life hard. Small businesses are feeling that. People are feeling that too, right? They're going to the store, they can't buy as much as they did before, but it costs just as much. So you're still spending $100, but you got less bags when you go to the grocery store. I know I feel it when I go to the grocery store saying, I could have sworn that was cheaper before. And then, you want a plastic bag? Oh, you got to pay, all this money for it. Or we don't even have, now I go to the store, we don't even have plastic bags anymore. It's like, this is ridiculous. It's like another, anyway, that's a whole different story. But everything becomes like an additional tax, an additional service. Oh, you want that? Oh, it's more. So we're paying more. I think you get the point. I talk about this all the time. This video right here is what you got to do. So if you see something happening with Australia, if you see something happening with Peru, you can look into that information and make investment decisions and choices with your current portfolio, or maybe you want to add to a particular position. This is what you got to know. It's right here in this video. Click it and I'll see you there.